Yes. What do you do, traders? This is Seston here from the Binary Elite Division Academy. So, in today's video, we want to look at how you can trade a breakout pattern, right? And how you can analyze a ranging pattern, right? So, we're gonna do that from a running trade that we're in from the indice Crash 500. It's actually a live trade that we're in, and yeah, it's doing so well. So we want to take a look at the analysis that we did from this trade and break it down and show you the simple price action techniques we use to execute this trade. So it was a good one, as you can see. This is a daily time frame, and we actually managed to hit a full day candle, as you can see. So it is a good one, a very good one. So without wasting time, guys, let us look at this market, right? So in the daily time frame, remember, it's very necessary to look at the daily time frame when you're doing your analysis, right? Because it's part of the top-down approach, right? We break down the market in simpler forms so that we can have a better understanding of that particular market. So as you can see, this is a daily time frame that we're in, and the sell is doing so well. And as you can see from the trade, it's doing so well. And let's get back to the analysis that we want to look at. So as we're in the daily time frame, we notice that this market, right, was playing around the same area, right? Which areas are those? Which is these ones, right? This is the first area, which is marked by that rectangle, right? And the second area, which is another demand area, right, was this one, right? And of course, this was another area of value where the stop loss, close to the stop loss is, right? So this was more like the arrangement from the daily time frame, right? We didn't have much, but we just marked our supply, which is at 44.09, and our demand at 41.78. This is like what we could only manage to see from the daily time frame, right? And as always, we would need to break the market down and go to a lower time frame, which always obviously are conducive to our trading capital. So as we went back, we noticed some things, right, which are this ranging market here, right? With the ranging market here, let me just highlight it maybe in a better color, right? So this was the ranging market that we have here, and we had something again. This is the 1 hour time frame, mind you, and we had something again. We had something like a resistance coming from 44, 45, right, all the way to this point. This was the resistance that we had, right? And we had another area of value, which was this area here, right? And so we had this frequency of the buys. The buyers were actually playing around the same area, hence they were consolidating, right? So we actually don't need to take trades in this type of a market, right? Because it is actually a very dangerous approach and a very dangerous way to trade, right? Because it's ranging. Neither the buyers or the sellers are in full control of this particular market. So we always need to be cautious when we are attempting this type of a market. So anyways, without wasting time, we noticed something. I mentioned something about an area of value here, right? An area of value, like I always say, guys, it's an area where our buying orders or selling orders can step in and push the prices down. So as you can see, if we zoom in there, we can see there was frequency of bouncing of the prices, right, on the area of value, which was also a minor supply, right? So there was a frequency of the prices bouncing up and down at that level at 43.33, right? So we had to take that as our first confluence, right, for entering this particular trade. The second confluence came in the form of what? Of the resistance, right? Why am I saying this? And yet it didn't even hit the resistance line. Okay, so remember from 44.44, right, we had our trend line, which stretched all the way from here to here, right? So this was the first touch, the second touch, the third touch was supposed to be somewhere around here, but we noticed something. We noticed that this market, as it went up here, it had a very, very strong rejection of what, of the higher prices, right? And it was a signal to us that this market is likely going to what, to have something like a what, a tendency to pull the prices down, right? That was the result of the strong what, of the strong resistance, as well as the strong what, the strong area of value. So in that case, it reversed, and we had to enter as soon as the 15-minute candle closed. So we had to go back in the 15-minute time frame and break down this candle. So that is where we entered here, right after the close of this candle, because you notice that this candle was more like in it was indecisive. That's the first thing. But the second thing is we saw that it had very, very strong bearish qualities, right? And we had to enter there. So immediately after entering, right, our first TP was here, right? And yeah, yes, this is the same reason is true. Yes, we noticed that we had what, an area of value here. We also had an area of value here, right, where the price actually broke out. Now this was the breakout. They broke out of this what, of this resistance, right, of this ranging market as well, and they fell all the way down. So in trading a breakout, remember, when you're trading a breakout, always you wait for the what, for the breakout and the retest. But in this case, you didn't have to do that, right? As soon as the 15-minute candle closed, right, just below this what, this demand, you had to enter more sales. Of course, we are in the 1 hour time frame, but then still it still had the same meaning in the 15-minute time frame. So this is a trade that we ended, guys, and we did so well. As you can see, this is where we ended, and we went with the trade all the way down, killing it. So for the future analysis of this market, it's still going down, guys. It's still going down. Yes, right now we have the bulls which are stepping in, but they are not going to be in for long, because they are going to push the prices all the way to 41. Right, that's where the sellers are going to push the prices up to. So yeah, this is what we did. This is how you trade a breakout, especially if it is in an observable breakout, and yeah, in an observable ranging market. This is what you do. You know that they are killer entries, right? The bears were very, very strong, and the bulls were very, very weak. So this is how you just use just very, very simple price action techniques, and of course applying candlestick mechanisms, right, to kill these types of a trade, right? So this is what we had, guys. This is what I had for you. Yeah, and these are the running profits, right, that we're in. Yeah, it's coming back a bit, but it will go down, go completely down, and our target profit is supposed to be around 2K for this current trade. Anyways, guys, thank you for watching, and don't forget to like, comment, and subscribe. Signing out.